Hello and welcome to RHB Fund Discovery Podcast. I'm Nova Lui, Head of Investor Advisory at RHB Bank. It's always a pleasure to connect with you again. As we enter the third quarter of 2025, market dynamics remains fluid, shaped by shifting trade policy, evolving central bank strategies, and investor sentiment globally. Today, I'll walk you through market movement, investors' fund flow, our curated fund discoveries list, and the strategic themes guiding your investment journey. Let's dive in. For the past 3 months have been nothing short of dynamic. In the US, Nasdaq gained 21.3% and S&P 500 climbed 14.2%, powered by the AI-driven tech giant despite tariff headwinds. FTSE Taiwan 50 surged 22.9%, while South Korea COPC soared 26.9%, fueled by semiconductor strength and favorable policy reforms. Japan Nikkei 225 added 13.9%, supported by a weaker yen and export-driven tailwinds. Closer to home, Hong Kong Hang Seng rose 13.7% amid Chinese stimulus plan. China's A-share gained 9%, though capped by trade frictions. Malaysia's KLCI fell 1.47%, pressured by commodity weakness and political uncertainty. Volatility remains a key theme, driven by US tariff rate cut bets and global stimulus responses. In times like this, staying diversified and responsive is crucial. Let's decode recent investor behavior through the lens of Malaysia industry fund flow. First, we have seen that Bond Malaysia Fund attracted Ringgit 3.1 billion in 3 months and 3.5 billion over 6 months, thanks to the Ringgit stability, favorable yield, and strong foreign demand. Within the global income, we have seen it gains a lot of popularity. Funds such as Mixed Asset USD Flexible Global and Equity Global Income drew steady inflow. Investors are seeking global diversification with yields. There are some equity outflow, especially in the tech and Asia segment. Sizable redemption hit the tech sector of 1.1 billion and Asia ex-Japan equities, reflecting a rotation to defensive amid soft earnings and tariff fears. Gold and commodities are used as hedges. Commodity precious metal fund flow saw inflow of 357 million ringgit over 6 months, a clear signal investors are hedging against inflation and global uncertainty. Let's spotlight 5 standout funds aligned with today's landscape. First is the RHB Global Equity Premium Income Fund. This is one of our fund-focused income strategy. The fund target to pay 7 to 9% per annum via dividends and option premium. Volatility is an advantage for the fund as it captures equity premium through market volatility. The underlying is actively managed and diversified across global blue chip sectors. The fund fits into JP Morgan UCITS ETF, which benefits from a top-tier managers with $4 trillion of asset under management. The fund also has an option for the MIR H class, which minimizes the currency risk for Malaysian investors. RHB GP Fund is well suited for those seeking steady income with capital growth potential in an uncertain environment. Second is MAMG Systematic Asia Pacific Equity Absolute Return Fund. This is designed to deliver return regardless of market direction. The fund uses the market neutral strategy, a long-short exposure through APAC equities. It uses the AI-powered insight to adapt dynamically through predictive models in terms of its asset allocation. The model covers up to 4,500 stocks, which tap into both large and small cap opportunities. The target fund is managed by BlackRock, which is a global investment expertise. The fund strategy target consistent alpha with lower correlation to market beta. This fund is ideal for investors looking for non-directional strategies that prioritize risk control and diversification. The third fund is RHB Dynamic Artificial Intelligence Allocator Fund. This is a unique multi-asset portfolio powered by AI. The AI-driven asset allocation allocate across equity, bond, and digital assets. Because it's emotion-free decision, it reacts to macro and technical signals based on the AI model. The fund achieves exposure into digital asset via the institutional grade ETF. Based on the historical backtest, it has proven resilient and deliver higher return and at lower drawdown compared to its underlying. This fund offers a diversification for progressive investors who are open for innovation. The fund embodies our quantum blend theme, where AI meets digital asset for the next generation of portfolio design. The fourth fund is AHAM World Series Global Income Fund. This fund is a globally diversified fixed income solution. Currently, the portfolio holding has the annualized yield of 6.3%. It uses a barbell strategy, which means it's holding a mix of investment grade and high yield bond. The fund manager positions its portfolio on the expectation of an interest rate cut, which benefit the bond portfolio. This fund fits into the top tier fund manager, which offers global bond exposure. This strategy overall is suitable for investors who are seeking stability, especially in a lower interest rate environment. As central bank pivots towards easing, this fund is timely for yield-focused investors. The fifth fund is RHB Global Sharia Equity Index Fund. This is a Sharia-compliant global growth fund which tracks Dow Jones Islamic Market Titan 100 Index. It focuses on US tech leaders including the Magnificent Seven. The strategy itself is transparent. It tracks and gains exposure into the underlying index. Since inception, the target fund has gained more than $6 billion. It's managed by HSBC Global Asset Management, a trusted global name in Islamic finance. This fund is a compelling option for investors that is seeking Sharia-approved and growth-oriented solutions. Here are the 4 investment themes shaping our Q3 2025 strategy. The first strategy is tariff deep, quality grip. Tariff may have dent market short term, but quality large cap growth stock, especially in the US and India, remains resilient. Chinese equity is also a value buy since its low valuation and stand out to bottom up from the US tariff events. The second investment theme is rate cut is when, not if. Global central banks are leaning towards easing monetary policy. In Malaysia, the OPR cut makes bond attractive again, with MGS average yield around 3.73%. For higher yield, investors may look into Aussie-denominated state or bank bonds. Interest rate cut will drive bond price higher. The third investment theme is quantum blend when AI meets the digital asset. RHB launched a fund that is RHB Dynamic Artificial Intelligence Allocator Fund, where the fund actually offers exposure into risky asset and money market exposure, such as equity, money market, and digital asset. The potential fusion of AI and crypto like Bitcoin offers next generation growth potential. The strategy itself allows the AI to decide the allocation between the institutional money market or Bitcoin ETF exposure. The fourth investment theme is built for the storm. Investors may look into funds that are prepared for volatility with resilient strategies, which generate equity income premium or benefit from the long-short market neutral strategies. Such absolute return strategy and income generating funds are key to ride through market swings. At RHB, we believe fund flows trends are not just data, they are insight into investor psychology, market reflection points, and ultimately opportunities. What should you do now is to contact your relationship manager to discuss how you can rebalance your investment portfolio based on this trend. You may also want to explore local or Australia direct bond and income strategies. Our advisory team is here to support your long-term goal with timely and tailored investment advice. In conclusion, today's uncertain environment doesn't call for retreat, it calls for realignment. Whether your priority is steady income, AI-led innovation, capital preservation, or long-term growth, we at RHB Bank are ready to help you navigate the market with clarity and confidence. I strongly encourage you to reach out to your RHB relationship manager. Let us tailor a strategy that reflects your goal, risk appetite, and the opportunity the world now offers. Thank you for joining me, and until next time, stay invested and stay ahead.